The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem. All right, markets are a little shy right now, trailing ahead of the Jackson Hole Summit, where Fed Chair Jerome Powell will speak. And joining us now to discuss is Rufus Round. He's the CEO of crypto broker GlobalBlock. Hello there, Rufus. Thank you for joining us. So Bitcoin and ETH, they remain kind of in their recent holding patterns ahead of this Jackson Hole Summit with Fed Chair Jerome Powell. What are you anticipating coming out of this?
Hi, Christine. Thanks a lot for having me on. What am I anticipating coming out of Jackson Hole? Well, not a lot. I think there's too much anticipation, to be honest. I think markets have sold off a little from their recent euphoria, given the weaker inflation numbers out recently. And the Fed has given itself breathing space to either be more hawkish or more dovish. And looking at the markets where they are now, if you believe in the theory that sometimes the tail wags the dog, Powell's speech may well be a bit of a damp squib. But there's a lot of buying, I think, in the background. And once there are no surprises out of here, I can see a good case for a rally. We're certainly, at GlobalBlock, we're certainly seeing some of the more patient investors line up with Bitcoin and Ethereum purchases.
Well, it seems that we're seeing a lot more selling this morning than buying, but I want to point your attention to this CoinDesk poll that we had on Twitter, which was, how will Fed Reserve Chair Jerome Powell's Jackson Hole speech impact the price of Bitcoin? And we see that 41% said Bitcoin will go higher, 36% said it'll go lower, and 23% saying that the price will remain unchanged. How would you cast your vote?
I'd go higher, of course, but that does depend on your time frame. And I guess this poll is designed to capture immediate movements thereafter. And guessing the immediate movement is always a bit of a coin toss. But like I said earlier, I think there is some pent-up buying pressure. Assets are a bit lower, as you said. There's been a bit of a selling, a bit of selling pressure, and these kind of moves ahead of events tend to reverse. So I'm happy with the up bet, as it were, after the speech.
Well, the up bet, I would think that then you might anticipate his speech being a little dovish and perhaps a little more, kind about the inflation picture out there, which would be maybe there he would lighten up on the tightening there. I just want to also mention that. Go ahead.
Sorry, that's a reasonable assumption. I think that it might be a bit dovish, but I think importantly, I don't think he's going to launch any surprises here. It's the first live streamed event ever, and I think he'll be more focused on just keeping the status quo, to be honest.
So an inflation gauge that the Federal Reserve uses as its primary barometer is out this morning. Core PCE increased 4.6% in July, marking the lowest annual increase since October of 2021. How does this impact the greater macro picture for the markets in crypto?
Well, I think it kind of backs up the bond market case, which is looking at inflation, to my mind anyway, and seeing that these are transitory effects brought to us by the pandemic and now the war and global supply chain issues, and those will subside, and commerce will get back to what it does best, trying to compete each other out of business, lower prices, and eventually we'll get back to a more even footing with asset prices rising at some point soon.
Mm-hmm. And on August 26th today, about $1.3 billion worth of ETH options expire, and data signals that the price is likely to stay pinned under $2,000 until the merge. What's your outlook on ETH?
Yes, that's very interesting. So I hadn't been following the August open interest because the merge is scheduled, I think now, September the 6th. And I noted recently that open interest in ETH options for the end of September expiry has for the first time exceeded that of Bitcoin. And the options smile, so the price of volatility for higher strikes versus lower strikes is very well bid. There's a lot of interest in the 10,000 strike, but most interest in the 4,000 strike for the September expiry. And there's less interest, but still significant interest in downside strikes, so for the put options. But I believe the max pain point for options holders is around $1,400 each, or that may have shifted, but that was certainly the case a couple of weeks ago. It seems to me like people have taken spot risk off the table over the last few weeks and replaced that with exposure to options plays. So they've been buying upside strikes, perhaps financed with selling downside puts, and option market makers have been facilitating that and hedging themselves accordingly, and perhaps taking the reverse trade in the October delivery as well. So you see significant interest in that expiry as well.
Rufus, did you say $10,000 strike price for ETH?
Yes, I did. There is a significant amount of open interest in there. It's I mean, if the market's right, that's a very asymmetric trade. The interesting thing about the merge is that what it seeks to achieve obviously has never been done before, and it changes the whole dynamics of Ethereum. So Ethereum as a proof of work blockchain technology has been found to be laborious and a bit slow for its broader vision, its big plan to be the decentralized world smart computer. And you can't really have transactions taking a long time and the transaction costs being too excessive for that to work properly. So proof of work being replaced by proof of stake makes that much more efficient, makes faster transactions, and should lower the price. And it also gives a kind of discounted cash flow analysis to Ethereum. You can then start to model all the fees. You can have models about how you anticipate fee transactions to generate. You can see how the coins that you stake might grow. In terms of staking rewards. I think holders of Ethereum will also benefit from this as tokens get slashed as part of the new token economics. So there's a very interesting valuation model out there, not mine unfortunately, but that paints a very bullish picture for Ethereum based on cash flows. So using the old DCF that traditional finance has used for decades, centuries even.